Okay, so let's start. We want to start a new topic. Now. And our new topic is called Leases. That's our new topic. So let me introduce it. Of course, to you, the term lease is not a new term to you by now. The term lease is not a new term to you. Of course, as a business, you can lease an asset. If you are a company and you are leasing an asset, let's say a motor vehicle, then you as the company leasing this motor vehicle, let us assume you are leasing it from a company called General Motor. So you are a company A leasing a motor vehicle from company General Motor, from a company called General Motor. So you as company A, we normally refer to you as the lessee. General Motor, who are going to give you that motor vehicle on lease terms, they are referred to as the lessor. So the owner of the asset is called the lessor, while the person leasing the asset is called the lessee. Okay? So what we want to look at now is how do you as a lessee, when you lease a motor vehicle or an asset like machinery, how do you account for that lease? Now listen. Normally, there are two types of lease. There is one type of lease we normally call finance lease, or there is another type of lease we call operating lease. These are the two types of leases. Now, listen. Before the accounting standard on leases was revised, we used to have another accounting standard on lease called IAS number 17. IAS number 17 was the one before the IFRS number 16. There was an IAS number 16. So it required, listen, I am talking now, it required that when you as a lessee, you lease an asset, it was upon you to classify that asset as either an operating lease or a finance lease. You were required by IAS number 16. You as a company A, you are required to classify your lease as either an operating lease or a finance lease. Now listen. But according to the new accounting standard, once the accounting standard was revised, and now we are dealing with IFRS number 16. This number 16 says that you as a lessee now, you should not classify, listen, you should not classify that lease as either finance lease or an operating lease. When you as a lessee now, when you lease an asset, you don't recognize it as either being an operating lease or a finance lease. Instead, listen, instead, you as a lessee, you should recognize that lease. You as a lessee, you should recognize that lease both as an asset in your books and at the same time as a liability. You should recognize it as an asset and at the same time you should recognize it as a liability, that lease. Now listen, why should you recognize that lease as an asset in your books? Remember, when you lease that motor vehicle from General Motor, it gives you the right to use that asset. And that right of use of the asset makes you to have that asset as an asset to you, or makes you to have an asset in your books. So we are saying you as a lessee, you should recognize the lease both as an asset and as a liability. As an asset because now you have the right to use the asset. As a liability, why should you recognize this lease as a liability? You should recognize it as a liability because you have the future obligation. Remember, you are leasing this asset and you will be paying some installments in the future. There will be lease payments you will be making in the future, maybe for the next 5 years, 10 years, and so on. And because you're going to lease this asset and you're going to be making payments for those next 10 years, then that means because of the future obligation to pay those liabilities or those installments, then you are now required to recognize a liability. So the reason why you are required to recognize a liability when you go into this lease contract is because you have those future obligations of making the lease payments. The reason why you should recognize it as an asset, this lease contract, why you should recognize it as an asset, is because you have the right of use of that asset. You have a right of use of that asset. Okay? So that's what we are saying. So I have said, let me review that. I have said, before the accounting standard IFRS number 16, IFRS number 16 was there. Before it became effective, there was IFRS number, IS number 17, IS number 17. That was the accounting standard for leases. I have said, in the original accounting standard, a lessee was required to classify the lease contract either as a finance lease or an operating lease. Then I've said, but the new accounting standard on leases, IFRS number 16, does not require the lessee to classify the lease. No. Instead, it requires the lessee to recognize that lease contract both as an asset and as a liability. An asset because we have said you have the right of use for that asset. You have a right of use. So you recognize it as an asset. And that value we normally call it right of use asset. Right of use asset. Then we are saying you should also recognize a liability, which we normally call a lease liability. Why do you recognize a lease liability? Because you have that obligation as a lessee to make those future lease payments. And because you have those future obligations, then you should recognize that as a liability also. Good. Now, let's put down something on what we have already said. Let's put down something on what we have already said. No, maybe before we put it down, listen. Now that you're going to recognize, now that you're going to recognize as an asset, you will debit your account called right of use with the amount of the asset. You will debit an account called right of use asset. Right of use, we call it right of use asset. Right of use asset. Then with the amount of the liability, you're going to credit what we call lease liability. Lease liability. So that's how we record the value of the asset. You take it as an asset, you debit an account called right of use asset, and you credit for the liability, you credit the amount or account called lease liability. Good. Now, before we continue, before we continue now, there are some new students who have joined us today for the free class. Some students requested to join for a free class. Now, for you new students, I'm asking you, or if you are a normal student and you have not subscribed, please subscribe to my YouTube channel. So that you will be notified of future postings in the future whenever we post new videos in the YouTube. So even as you are watching now, if you have not subscribed, please click that subscription button down there. Click that subscription button down there and subscribe if you have not subscribed. Even for my normal students, not only those who are new, but everyone who is watching this video. If you have not subscribed, please subscribe. Okay? Just click that subscription button. That way, it will help you to be notified whenever we post new videos on the YouTube. Okay? Now, for the new students, listen, especially those who are joining us for free today. If you want to join our normal class, for advanced financial reporting, which is what I'm teaching, or for your friends who are doing financial reporting, we also have online classes for financial reporting. We also have online classes for financial accounting of the foundation level. So if you are currently in this group and you are willing to continue with the group in terms of online class for advanced financial reporting, that's okay. You can call me. If you have friends who are doing financial reporting of the intermediate, let them know that we also have online classes for financial reporting. If you have friends who are doing financial accounting of the foundation level, or what used to be called section 1, and even the one of ATD, let them call me. They can reach me on this line 0722 658875. They can reach me on 0722 658875. Listen, if for the new students, if you cannot join our online classes, then you can still buy what we call the pre-recorded videos. For any of these classes, you can buy the pre-recorded videos so that you watch them at your own free time, at your own pace. Good. So either you join the online classes. For more information, you can call that number. Either for advanced financial reporting, for your friends who are doing financial reporting, or financial accounting, let them know. I've said if you can't join the the online classes, the live classes, then you can still buy the pre-recorded videos. You can still buy the pre-recorded videos, okay, for any of those three subjects. If you want to get more information, please call that number 0722 658875. Good. So let's continue. So I was saying we need to put down something now for everybody now. Let's continue now. I was saying let's put down something now on what we have already discussed. So put down the topic. Leases, IFRS number 16. Leases, IFRS number 16. Leases, IFRS number 16. Leases, IFRS number 16. Then you say this. Say this. This IFRS number 16, this IFRS number 16 replaces the IAS number 17. That's the first statement. This IFRS 16 replaces the IAS 16. Another paragraph. In the original IAS number 17, the lessee was required to classify the lease, or to classify a lease. The lessee was required to classify a lease. Either lessee was required to classify a lease either as being a finance lease or an operating lease. Either as a finance lease or an operating lease. Either as a finance lease or an operating lease. But in the new accounting standard, IFRS number 16, but in the new accounting standard, IFRS number 16, the lessee is required. The lessee is required to recognize. The lessee is required to recognize. The lessee is required to recognize the right of use. The right of use, look at it, this, put now this, and the KV, right of use, then you put in bracket ROU. We normally say in short, ROU, right of use, we normally write it in short, ROU. Then you come and say, I've said, listen, I've said the lessee is required to recognize right of use, ROU asset. Put that term asset, and say right of use asset. Otherwise, in bracket, we are putting ROU. In short, we normally call it ROU. You are required to recognize right of use asset and a lease liability. And a lease liability. So the lessee is required to recognize the right of use asset and a lease liability. Good. Another paragraph or another subheading. Maybe put it as a subheading. Put it as a subheading. Put it as a subheading. Accounting treatment as a subheading. Accounting treatment. Accounting treatment by the lessee. Accounting treatment by the lessee. Accounting treatment by the lessee. Then you say this, that is the subheading, accounting treatment by the lessee. Then you say this. Say this. The lessee should recognize, the lessee should recognize, the lessee should recognize right of use asset, right of use asset, and a lease liability. The lessee should recognize right of use asset and a lease liability. And a lease liability. And a lease liability. The lessee should recognize the right of use asset and a lease liability. Then you can put down this double entry. Just copy this now. Just copy this double entry. You debit right of use asset. Right of use asset. Right of use asset. And you credit lease liability. You debit right of use asset and you credit lease liability. Good. Now let me go to the most critical part now of the topic now. That was just the introduction. Now we are going to some of the critical parts of the topic now. Listen. So the question is this now. Listen. How do you determine the amount to be recognized as a lease liability, and how do you determine the amount to be recognized as the right of use asset? Okay. So let me start with how. Let me discuss how to determine the amount the lessee will recognize as a lease liability. How much the lessee will recognize as the lease liability. Now listen. Let me assume that we have signed a lease contract today, and today is maybe 1st January 2023. That is the day we are signing that lease agreement. Listen to this now. You as a lessee, you agreed. Listen. You as a lessee, you agreed that you're going to lease this machine or this motor vehicle for 10 years. And you are going to pay the lease payments or those installments in arrears at the end of each year. Listen, you are going to pay those installments at the end of each year. So the first one this year will come by 31st December 2023. Every December you will be required to pay. Every December you will be required to pay. Listen to this now. So if you are going to pay the 10 installments in the future, you have that obligation. As a company A, you have an obligation to pay those lease payments, those 10 lease payments at the end of each year, starting end of this year. So that obligation makes you to have that liability. So to get the amount of the liability, listen, you get what we call the present value. Listen, get the present value of the lease payments. Listen, I want you to listen. The present value of the lease payments that have not yet been paid by the beginning. By the beginning, that have not yet been paid by the beginning of the period. I will explain that in a short while. By the beginning of the period. Now, for here, I was signing an agreement on 1st January 2023. I have said, listen to this, I have said, I'm going to pay these installments in arrears. That means at the end of each year. It may be possible, listen, it may be possible that you signed an agreement to be paying the installments in advance. Meaning, if you are paying your installments in advance, then the first one you pay it the first day. Okay? Then every January you will be paying another one. Every January you will be paying another one. So get the point here. If you are paying your installments in arrears, then in the future, you will pay 10 installments. Get the present values of those 10 installments. Listen, if the question is one where you are told you are paying installments in advance, get the point here? You are paying your installments in advance, then the first one, you are paying it today as we are signing the contract today. So your future obligation are how many installments remaining? How many more installments are remaining? 9 more installments. So you get the present value. Get the point? You get the present value of the installments or the lease payments that have not yet been paid. That have not yet been paid by the beginning of the period. By the beginning of the period. So for the first one which you are paying today, you don't get the present value of it. It's already at its present value. So you don't get the present value. You only get the present value of the one you will pay in January 2024, January 2025, January 2026, and so on. You get the present value of the lease payments that have not yet been paid by the beginning of the lease period. Are you there? Very important. How to determine the lease liability. You get the present value of the lease payments that have not yet been paid. So if you are paying your installments in advance, then you have how many more installments to pay? 10. No, if you are paying your installments in arrears, you are having 10 installments to pay because you'll be paying at the end of each year. The first one will come at the end of this year. Okay? Good. But if you are paying your installments in advance, then the first one was already paid or has already been paid by now. So when I'm getting the liability as of today, I need to know I've already paid the first one. That is not an obligation again. So I only get the liability of the remaining 9 installments that are remaining to be paid at the beginning of the lease period. Are you there? Good. That's important. So, but the key word is get the present value of those future payments, lease payments, which have not yet been paid. Good. That is how we determine the lease liability. What about how do you determine the amount we call right of use asset? How do you determine the amount we are calling right of use asset? Listen, you as a lessee, you are leasing this asset. You want to know, what will it cost me in total? Listen, what will it cost me in total to lease this asset? Whatever it will cost you in total to lease that asset, that is what we will consider as your value of the asset, or what we are calling the right of use asset. I want you to follow carefully how we determine this amount, the right of use. I have said, in essence, we are looking for what is it that is going to cost you in total to lease this motor vehicle up to the end of the lease period. How much will it cost you? Whatever it will cost you, that's what you look at as an asset now. Good. One, there are several components. One of them is the amount we are calling the lease liability. To get the right of use asset amount, you use one amount we are calling lease liability, which is this amount that you just got up there. Whatever is the lease liability, remember, these are the obligations you will be paying. If you are going to be paying 2 million, 2 million, 2 million, 2 million, 2 million for the next 10 years, that is costing you those 2 millions in the future. So that should be part of the value of the asset. Okay? So one component in the determination of the right of use asset is the amount you are getting or you got as the lease liability. Okay? That's one. Number two, from there you add any lease payments. Lease payments, you add the lease payments at or before the commencement period, or before the commencement, the commencement period or date. Let me explain that one. I told you, if you as a lessee, you agreed with the lessor that you'll be paying your installments in advance, 2 million, 2 million, 2 million, 2 million, 2 million in advance. Then I said, to get the amount called lease liabilities, you had to get the present values of how many installments? 9. But remember, there is a first one you are going to pay today. Okay? So if you are paying your installments in advance, then the first one you are paying today is not part of that value we are calling lease liability. Or in other words, we can call this amount whatever you are required to pay as a deposit. There could be an agreement which requires you pay a deposit at the beginning or the first installment. Whether it's a deposit or the first installment, that amount was not to be discounted. It is already at value which is required. So the amount we add here is what we are calling the lease payments at or before the commencement period or the commencement date. If you are paying the first one in advance, or what we are calling, maybe it's a deposit, maybe it's a question they are calling it that you have to pay a deposit like in hire purchase and so on, then we are saying that first one should be added. Listen, if the question is one where we are paying our installments in arrears, then you got the present value of the 10 installments. So you will not have anything to pay on the first day. So you don't add that lease payments at the commencement. If there is nothing you are paying at the commencement, either as a deposit or your first installment in advance, then you don't add it. Are you getting? Good. Next item, you add what we call initial direct cost. Initial direct cost. If there are any direct costs, listen, that you as a lessee you are incurring in order to arrange this for lease agreement. For example, maybe you will hire a lawyer to prepare the lease agreement so that you sign it, or whatever the lease agreement was prepared by somebody else, you have to give your lawyers to go through and check whether there is anything wrong, whatever in the lease agreement. So if there are any initial direct cost for you to come up with this agreement, maybe it will cost you to pay a lawyer 5,000, whatever, to read through the document or to prepare that lease agreement. So we are saying if there are any direct costs, they should be added. So we are giving an example, e.g. legal costs. Legal costs to arrange, legal costs that are incurred to arrange for the lease. That should be added, whatever it is. Good. Now listen. Another thing is your lessee, the lessor, when you are signing this agreement, he could give you what we call an incentive. So that you go into this agreement with him, he gives you an incentive or maybe a refund. Some books will call it a refund or an incentive. If you are being given an incentive of 200,000 or 300,000 to lease this motor vehicle, or a refund of 200,000, then it will reduce your total cost. So we come and less now any incentives that you as a company A, the lessee, you are receiving. Any incentives received, those ones should be deducted. Don't forget, we are looking at how much it will cost you to lease this asset. Whatever it will cost us in total, that's what you recognize as your lease asset, or what we are calling right of use asset. I hope you are following. Good. The last one. Listen. At the end of the useful life of that asset, or in other words, at the end of the lease period, if it's a machine that you had leased and now it has to be returned to the original owner, the lessor, you may be required, not always, you may be required to dismantle that machine. You as a lessee. Maybe it's a machine that was installed somewhere, and after 10 years of the lease, it has to go back to the lessor. And it will cost you maybe to dismantle that machine. So whatever it will cost you at the end of the lease period, whatever it will cost you to dismantle that machine, then that's another cost that it will cost you. So you come and add any weight amount we are calling dismantling. Dismantling, some books will call it a removal cost. Some books will call it removal cost. Whatever it is, you add. Then whatever now you get here as the total, that now becomes right of use asset. Right of use asset. So this is one of the calculations one should be careful in the determination of the amount to be considered as the right of use. I have said to determine the amount we are calling the lease liability, just get the present value of the lease payments that have not yet been paid by the beginning of the lease period. Whatever lease payments that have not been paid, get the present values of those ones. Because those are your future obligations. Get the present values, whichever they are. That's all about liability. About asset, that's where there are some issues. I've said, the amount you got as the lease liability. Remember, this is something that it will cost you. You'll be paying the installment of 2 million, 2 million, 2 million, 2 million, 2 million, 2 million for the next 10 years. That's part of the liability. That's part of what it is costing you. So it should be part of the asset. So the lease liability amount also becomes part of the asset amount. Then you now adjust it with other items now depending with the question. One of the things that you may add is what we have called the lease payments at the beginning, which is at or before the commencement of the lease period, like a deposit maybe, or maybe it was a first installment you are paying in advance, that one should not be discounted. So you add it because it will still cost you. It will still cost you. Number two, another thing to add is what we are calling any initial direct cost. Any initial direct cost. Any cost that you are incurring in order to bring this lease into existence, that cost, you add it. We have given an example, maybe like legal fees or legal costs to arrange for that lease to cost you that much, whatever it is. Good. Then, if the lessee is giving you some incentive, that's reducing your cost. You minus the incentive received, any incentives received. And finally, we are saying if there will be any cost of dismantling the asset or removal cost of the asset, then you remember to add. Good. So before we go do now an illustration, let's put down those two values. Let's put down those two values. So andika somewhere as a subheading, put down a subheading, lease liability. Put down a subheading, lease liability. Lease liability. Lease liability. Lease liability. Then you say this. This amount is determined. Lease liability is the subtopic. Then you say this amount is determined as follows. This amount is determined as follows. Below that, andika. Below that, andika. Present value. Present value of, we call it present value of the minimum. We also, some books will call it present value of the minimum lease payments. Present value of the minimum lease payments. Present value of the minimum lease payments that have not yet been paid. That have not yet been paid at the beginning of the period. That have not yet been paid at the beginning of the period. So underline have not yet been paid. Have not yet been paid. That's important. By the beginning of the period. That have not yet been paid by the beginning of the period. So you get the present values. Of course, you have done finance. If you are told the installments are 2 million, 2 million, 2 million, 2 million, 2 million, then you know how to get the present values. You have done finance. Good. Now we go to the right of use. To have another subheading. Have another subheading. Right of use asset. Right of use asset. Right of use asset. Right of use asset. Then you say this. This amount is determined as follows. This amount is determined as follows. Just copy this. There is nothing to rub. Just copy this. There is nothing to rub. Andika number, the first item there, andika lease liability. Lease liability. Whatever it was your lease liability, that's one component. Lease liability. Then you add lease payments. Lease payment at stroke before. Lease payments at stroke before commencement period stroke date. Lease payments at or before commencement period or date. You can put in bracket deposit. Maybe it's an arrangement where you will be required to pay some deposit, whichever it is. That one we have said should not be discounted, but it's a cost to you as a lessee. Good. Then once you add that, you add next, you are adding initial direct costs. Initial direct costs. initial direct cost, initial direct cost, initial direct costs, initial direct costs. You can put in bracket, e.g., in bracket, e.g., legal costs, legal cost to arrange for the lease, legal cost to arrange for the lease, legal cost to arrange for the lease, legal cost to arrange for the lease. Okay, next, you less incentives received. If you are receiving any incentive from the lessor, then you less the incentives received. And finally, add dismantling. This is dismantling costs, dismantling, or what we call removal costs. Dismantling or removal cost. Dismantling, dismantling, or removal cost. Then whatever you get as the total down there, that's what you now use as. That's what you now use as the right of use. That's what you now use as the right of use. So finish, I move on. Finish, I want to move on now. Okay. So let me introduce the next item now. Let me introduce the next item. Okay, listen. I told you. Listen. I told you the lessor, according to the new accounting standard, should not classify the lease. Of course, the lessee, no, the lessor, listen, the lessor has the right to classify the lease as operating or financing. But you, the lessee, whenever you go into a contract, listen, you are not required to classify that lease as either operating or financing or finance lease. You are required to recognize two things: right of use, lease liability. Okay? Now, on the day you signed that agreement, you got maybe 20 million or 30 million as the right of use asset. Subsequently, listen, at the end of each year, how do you remeasure that value of your asset in your books? We have just discussed how to determine the right of use on the day of the contract, day one. We are to get the present value of the liabilities of those future obligations plus whatever. Now that is the value at the beginning, day one. What about at the end of the year? Now at the end of every year, this asset will now have to be depreciated. So in other words, we are saying, how do you measure those items? What is the subsequent measurement? In other words, we are now discussing what we call subsequent measurement. Subsequent measurement of the amount we are calling the lease asset. Subsequent measurement of the amount we are calling the lease asset and the lease liability. For the asset, we have said that right of use asset. Right of use asset, we have said it should be depreciated. That's what we have said. Just depreciate it. So whatever you got, you minus their cost, accumulated depreciation by the end of every year. You minus the accumulated depreciation by the end of every year. Good. Now listen. Whatever you got as the lease liability on the day one, how do you measure it in the subsequent period? That amount should be remeasured at its amortized cost. It should be remeasured at its amortized cost. In other words, you determine the amortized cost of that liability at the end of each year. To get the amortized cost of the liability, we shall be preparing what we call the amortization schedule. We shall be preparing what we call the amortization schedule. Are you there? Good. So that's what we do. That the subsequent measurement is, for the asset, it should be depreciated. For the liability, in the subsequent periods, you remeasure it at its amortized cost. You remeasure it at its amortized cost. Now, for the asset, I want to explain another key point there. For the asset, which has to be depreciated, listen. The question is this. You may lease a machine for 10 years. But the useful life of that machine is 15 years. Listen, you are leasing this asset for 10 years. But the useful life of that machine is 15 years. So you as a lessee, should you depreciate it over 10 years or should you depreciate it over 15 years? That's an important question I want to answer. So some questions, the lease period is not the same as the useful life. Some questions, the two are the same. But in some questions, you are told that we are leasing the machine for 10 years, but the useful life is 15 years. So how do you depreciate that asset? You depreciate it over 10 years or do you depreciate it over 15 years? Now, the accounting standard IFRS number 16 says, listen, that it should be depreciated at the lower of the lease period and the useful life. Whichever of the two is what? Lower. Whichever of the two is what? Lower. That's important. So now, here you will depreciate it over 10 years. Are you following? You depreciate it over 10 years. That's important. So whenever you have a question, I've seen one question somewhere where you are given the lease period being different from the useful life of the asset. So where there is a difference, pick the lower of the two, which in our illustration here is 10 years. So let's put down that information. So have another subheading, subsequent measurement. Have it as a subtopic, subsequent measurement. Subsequent measurement. Subsequent measurement. Then you say this. Maybe you can put a dash. Put a dash. Then you say this. The right of use asset. The right of use asset should be depreciated. The right of use asset should be depreciated. That's important. That's all we can say about the asset. The right of use asset should be depreciated. Then you can put another dash. Another dash. Another dash. The lease liability should be remeasured. The lease liability should be remeasured at its amortized cost. The lease liability should be remeasured at its amortized cost. Should be remeasured at its amortized cost. Another paragraph or another dash. Another dash. Sema hivi, depreciation should be at the lower of. Depreciation should be at the lower of. The lease period should be at the lower of the lease period and should be at the lower of the lease period and the economic useful life should be at the lower of and the lower of the lower of lease period and the economic useful life of the asset, and the lower of lease period and the economic useful life of the asset. You can say e.g. if the lease period, if the lease period is 10 years, if the lease period is 10 years, and the useful life of the asset, is 15 years, then the asset should be depreciated. And the asset should be depreciated on 10 years. The asset should be depreciated on 10 years. The asset should be depreciated on 10 years. Good. Okay, now listen. Before we now do a few calculations now, let me explain another point here. I want to put an NB. Now listen. You as a lessee, I want you to listen now. You as a lessee, you want to sign an agreement with General Motor to lease their motor vehicle. Now, for a lease agreement to be said to exist, listen, the lessee, for us to recognize a lease, the lessee is required to have two rights. These are just conditions for a lease to be said to exist. For a lease to exist, the lessee has to have two rights. One, don't try it fast, he has to have a right to obtain, listen, to obtain substantially all the economic benefit from the use of that asset. When we are signing this lease, as a lessee, do I have the right to obtain substantially almost all the economic benefit from the use of the asset? If yes, that's one condition that makes this lease to be recognized as a lease. That means you as a lessee, you should have a right to obtain substantially all the economic benefit from the use of the asset. That means you should be able to utilize the asset to almost its full potential. That means that's one. Number two, as a lessee, you should obtain the right, or you should have a right to state how the asset will be used. That means the lessee should not tell you how to use the asset that you are leasing. You have a right to direct on how the asset will be used. If those two conditions are met, then the lease is recognized. Okay? Those are the two conditions. Some questions I've asked you before. Under what circumstance should a lease be recognized? Number one, when the lessee has the right to, one, obtain substantially all the economic benefits or all the economic benefits from the use of the asset. Number two, when the lessee has a right to direct on how to use the asset. So let's put down those two notes. Sema hivi, NB. For a lease contract to exist, the lessee, bracket user, the lessee in bracket user of the lease in bracket user, you can close the bracket. For a lease to exist, or for a lease contract to exist, the lessee, in bracket user, close the bracket, of the asset needs to have right to, and you put a semicolon. Number one, it needs to have right to. Number one, obtain. Number one, obtain substantially. Obtain substantially all the economic, substantially all the economic benefits from the use of the asset. We have said the lessor, which is the user, should obtain or should have the right to obtain substantially all the economic benefit from the use of the asset. Number two, another condition. Number two, what other rights should he have? Number two, have the right to. Have the right to direct. Have the right to direct how the asset will be used. You should have the right to direct how the asset will be used. You are asking, listen, you are asking whether it is on operating or financing. Listen, I have told you, as per the new accounting standard, the lessee has no option of classifying the lease. To him, listen, to the lessee, it's like a finance lease. Any lease, it's like a finance lease to him. Ideally, he has to recognize all lease. In principle, all these principles that apply to the lease we are discussing are what we call the principles of a finance lease. Though the accounting standard does not say they recognize a finance lease, no. They are supposed to recognize 1, right of use, 2, lease liability. That's what the lessee should recognize whenever he's going into a lease agreement. But from the point of view of the lessor has a right. I have said the lessor has a right to classify on his part whether he's having an operating lease or a finance lease. But you, the lessee, the new standard says you should not classify. In other words, we are saying, it's like to you, all the leases are supposed to be treated like a finance lease. It's only that the standard does not call it a finance lease. They just say, recognize a right of use asset and a lease liability. And are you okay now? So there is nothing like classifying you as a lessee. You are not required to classify as either operating or financing. From the point of view of the lessor, he has a right. But you, according to the new standard, you should not classify. Recognize 2 things whenever you go into a lease: right of use asset and lease liability. Are you okay, Anne? Good. So anytime, listen, anytime you find a question and the examiner now tells you A went into a lease agreement with B, required, show the entries or show the statement of financial position in the books of A. Who is A? the lessee. So to him, there is nothing like operating or financing. In the old accounting standard, the IS number 17, I've told you he was required to classify operating lease and finance lease. Listen, in that accounting standard, if it was an operating lease, he was not required to recognize an asset. If it was an operating lease, he was only supposed to be paying what we call lease rentals. Lease rentals for an operating lease in the old accounting standard. That's what we used to teach. That in the old standard, there were only the lessee. If he had leased an asset by way of operating lease, then he was only to pay the rentals. Meaning, if you are leasing a motor vehicle under operating, then you don't recognize an asset. You don't recognize a liability. You just pay it's like you are hiring the asset. So you just pay higher charges every year, whatever are the higher charges. So it was easier for you as a lessee when you are dealing with operating lease. You just pay the rentals. Those are an expense. You just expense debit P&L, credit bank, debit P&L, credit bank for operating lease. But now we are saying in the new accounting standard, it's like all your leases, you as a lessee, it's like all your leases are finance lease. It's only that the question or the standard does not call it finance lease. Because if it calls it a finance lease, it's like there's another type of lease. No. So from your point of view, nothing to classify. Any lease, recognize a right of use asset. 2, recognize a lease liability. How do you get right of use? How do you get lease liability? We have discussed. Okay, good. Then those are initial recognition. Then we have also discussed subsequent measurement. Good. Now, we can continue now. So I want us to do an example now. I want us to do an example on how to compute that right of use asset. 2, how to compute the lease liability. Okay, that's what I want us to do. Now, I told you to get the lease liabilities, you do what? Get the present values. Get the present values. All of you now have done finance or are doing finance. Of course, you have done finance before. So you know how to get the present values of a sum or an annuity. You know how to get it. Okay? If it's an amount, you know it is 1 plus r to the power of what? N. If you are paying 2 million, 2 million, 2 million, 2 million, 2 million, 2 million, those are annuities. There is a formula for it. Or you still can use this formula. Sometimes, listen, sometimes, if you feel you can't remember the formula to get the discounting factor for annuities, you can still say maybe year 1, year 2, year 3, maybe if the lease is for 3 years and you are still paying cash flows of 2 million, 2 million, 2 million, then you can get the discounting factors by just taking 1 plus r to the power of negative n. So you just take to the power of negative 1, to the power of negative 2, to the power of negative 3, though they are annuities. Okay? If you can't remember the formula for annuities. But if you can remember the formula for annuities, here I've said to get the discounting factors, then you get the present values. If you think you will forget the formula for annuities. But if you remember the formula for annuities, if it's an annuity, then you know the formula. You take, to get the present value, you take that annuity, you multiply now that by the factor. How do you get that factor for annuity? It is 1 into what? Minus into 1 plus r to the power of negative n, everything to the divide by what? R. If you are given annuities, you can get the 2 million times all this amount, whatever is the factor, 1 minus into 1 plus r, the power of negative n. and you divide that by R. If they are annuities. I have said, they may be annuities still, but you can't remember the formula for annuities. So you can use like they are a single amount, single amount, single amount. So where you know the formula, that one is normally easier to remember. It is 1 plus R to the power of negative N. So you still take your 2 million, 2 million, 2 million. Now you prepare a small table for discounting or getting the present values, where you take 2 million times the discounting factor, 1 plus R to the power of negative 1. Then you come and say 1 plus R to the power of negative 2, 1 plus R to the power of negative 3. Still you will get the same amount. Still you will get the same amount. Good. Now, so maybe for the formula, we can put down that formula. So maybe you can put down something like this. Value, put down this subheading, value of present value discount factor. Just to remind you. Otherwise, some questions may give it to you. The annuity factor, some may not give it to you. But if they don't give it to you, how do you get it? So andika for a single amount. For single amount, it is 1 plus R to the power of negative N. For single amounts. Though you are doing 2 million, 2 million, 2 million. Or they could tell you 2 million, 3 million, 5 million, whichever. Okay. Then you come and say for annuity. For annuity. What's the formula? It is 1 plus R. No, sorry. It is 1 minus into 1 plus R, the power of negative N. Everything you divide by what? R. Everything you divide by R. Okay. So with that now reminder, that is just a reminder because you have done finance. So let me project a question now. Let me project a question. We do it about how to get the liability and the right of use. That's my concern for today. Let me project a question now. I will also share it in the group. I'll share it in the group. So there are 2 examples there I want us to do before we do a past paper question. There are 2 examples there. The first example is saying, the first example there, where installments are paid in arrears. Where installments are paid in arrears. So let me read the note or the question. Let me read the question. It says, BQ prepares financial statements to 31st December each year. Bullet 2, on 1st January 2018, BQ began to lease a property on a 10-year lease. Next, the annual lease payments were 2.5 million payable in arrears. The first being made on 31st December 2018. Next, BQ incurred initial direct cost of 500,000 in arranging this lease and received lease incentive of 250,000. The annual rate of interest implicit in the lease is 10%. When the annual discount rate is 10%, the present value of 1 shilling payable at the end of year 1 to 10 is shillings 6.144 required. Show how the lease will be accounted for in the financial statements of BQ for the years ended 31st December 2018 and 2019 under IFRS number 16, leases. Okay, let me do that now. Okay, let me do that question now. Now, so this one, of course, we are paying our installments in arrears. We are paying our installments in arrears, and the lease is for 10 years. They have given you the discounting factor, that down there. You don't have to calculate it. They have given it to you down there. You don't have to calculate it. That's 6.144. I don't have to calculate it. Are you there? Good. The other issue is, so I just take the present values of 2.5 million, multiply by that. Okay, let's do it. Let's do it. So let's get the present values. So let's put down example 1. That's the one we want to do now. Example 1. So andika determination of the lease liability. Determination of the lease liability. That is the first working you should do. Why? Because it will be part of the asset also. You should always start with the lease liability calculation. So we are saying it will be equals to annuity payment times annuity factor. Annuity payment plus annuity factor times annuity factor. Our payment is 2.5 million every year times 6.144. 6.144. What does it give us? Let me calculate it. So we come and say 2.5 times 6.144. That looks like 360,000. Good. 360,000. Okay. Now listen. If they had not given me, listen carefully, if they had not given me the 6.144, how would you have got it? We have agreed. That would have been arrived at by taking 1 plus 1 into 1 plus 0.1 to the power of negative 10. Are you there? Divide by 0.1. That's the formula. Let me just confirm that it will give me the same. It will give me the same. Let me confirm whether it will give me the same. That will be, I take 1.1 to the power of negative 1 no, negative 10, sorry. Whatever I get, I subtract from 1. Whatever I get, I divide that by 10, by 0.1. Yes, it's the same. Sawa. Alternatively, listen, I've told you, to get that 15.36 million, if you forget this formula and maybe they have not given you that 6.11, then you can prepare the table where you get the present value of the 10, 2.5 to the power of negative 1 to the power of negative 2. It's only that they have met many. Otherwise, if there were few like 3 years, whatever, those ones you can get. But still, you can get the table and do that. Okay? So we now know the lease liabilities. Let's do the calculation for the lease asset now. So andika hapo determination of right of use asset. Determination of right of use asset. Determination of right of use asset. What did we say? What it is costing me in total? As a lessee, what is it costing me to go into this lease? 1. All those 2.5s that I'll be paying in the future have a lease liability of how much? We take the lease liability, which we have got as 15,360. Then I told you add, listen, you add any lease payment at the beginning or before, the commencement period. For this question, there is nothing they're telling us we paid on the commencement period. There was no deposit, listen, there was no deposit, and at the same time, our installments are being paid in arrears. So there is nothing we paid on the first day, no, as an installment. Otherwise, if we are paying our installments in advance, listen carefully. Let me explain here now. Listen. If we were paying our installments in advance, listen, I want to mention here something. To compute the lease liability, listen, to compute the lease liabilities, and I told you, if we are paying our installments in advance, then that power negative 10 in the computation of the lease liability will not be power negative 10. Are you there? It would have been what? If we are paying our installments in arrears, in advance, yes, you are paying 10 installments, but remember the first one, you would have paid it on day 1. So you cannot get the present value of it and say it's a liability. No, you have already paid. So if the question is one, I hope you are following. If the question is one where you are paying your installments in advance, then to get the lease liability, then you get the present value of the future 9 installment. So your power negative n ingekuwa negative 9. I hope you are following. Negative 9. Everything would have been the same. It's only that you are paying 9 future installment. The first one will come next year, January. The other one, the other year, January. Because you have already paid the first one now. So you don't get the liability as a present value. No. That's why I would have added the first one here now. But now that I don't have any amount in advance, then I had to get the present value of all the 10 installments. Are you there? Good. Otherwise, it's important. It is important that you know that if we were paying our installments in advance, then you don't get the present value of the 10 installments. You get the present value of the 9 installments. So in your power n, ingekuwa 9, not 10. Because the first one is not part of the future payment. It's not part of the future payment. It's already paid. Hope you are getting my point. Good. Now we continue. We come and now say, what else? For this question, we had a direct cost. I remember. So we just come and add. Come and add direct cost. We add initial direct cost. I think it was 500. Let me go back to the question and check. I think it was 500. Yes, that bullet number 4 says BQ incurred an initial direct cost of 500,000 in arranging this lease and received a lease incentive of 250. Good. Let's add the 500,000. Then we less lease incentive received, which is 250. So what are we getting? There was no dismantling cost. Otherwise, I would have added the dismantling cost. But this question did not have any dismantling cost. So let's now compute what is the lease asset or the asset, right of use asset. So I take that 15,360 plus 500,000 plus, not plus, minus 250,000. That looks like an amount of 15,610. That's what we are calling right of use asset. Now you have the amounts. Now you can prepare the amortization schedule. So finish, we want to do the amortization table now. I told you subsequent asset to be depreciated. In fact, it is already here. Let us just come and see a depreciation charge per annum. Depreciation charge per annum, it will be 15,610 divided by how many years? We are told the lease period is 10 years. There was nothing we are told about the useful life of the asset. So there is nothing like useful life. We are just told the lease period is 10 years. So we are depreciating it on 10 years. So every year, this is 10 years. So every year we are charging 1,561,000. 1,561,000. That's what we shall depreciate every year. Good. Now we compute the amortized cost. So have another subheading or another determination. Put it down. Determination of the amortized cost. Determination of the amortized cost. Determination of the amortized cost. Now, here I want you to listen carefully again. There is something important I want to explain now. There is something important I want to explain for determination of the amortized cost. I have told you to get the amortized cost, you prepare the amortization table. Now listen. There are two kinds of tables that we shall be preparing depending on the agreement in the lease. There are two types of tables we shall be preparing depending on the terms of the lease. Listen. 1. Are you required to pay your installments in advance, or are you normally required to pay your installments in arrears? The tables are different. If you are paying your installments in advance, the table will flow differently. If you are paying your installments in arrears, meaning at the end of each year, then you prepare a different table. Now listen. Let me assume, like our question is, that we are paying our installments in arrears, like it is now. So to get the amortized cost at the end of the year, I said you prepare an amortization table. So you will need a column of the year. Don't write fast. You will need a column of the balance brought down. You will now come and say, listen, our first year was 2018. Our liability by the beginning of that year, we have calculated it. What's the lease liability? The lease liability was 15,360. Here, 15,360. Let me put the figures in thousands so that my table doesn't become long. Listen. The next column, listen carefully now. The next column will either be a column for interest or it will be a column for installment, depending on the agreement. If the question is one where you are paying your installments in advance, then you are paying the first day of the year. So you would have come and said here, installment. Listen, once you pay that installment of 2.5, then it will leave you with another amount we call the subtotal here, which is 15, because you are paying this 15, you are paying immediately 2.5. So you will remain with a liability of something like 12, let's assume 12,500. I'm assuming, don't whatever. I'm assuming 12,500, okay, or 12,360, something of that nature. Then listen, that 12,500 will be the liability as at when? It will be the liability as at the beginning. Because day one, you have a liability of 13 or 15, sorry. The same day one, you paid in advance for 2.5. So from day one now, you are remaining with this liability of 12,500 to be the liability that will accrue for the year. That will accrue for the year. Therefore, you come and charge interest on that amount. Okay? Maybe if it's 10%, you charge 10% of that, which will be 1,250. Then you get your carry down, whatever it is, this plus this, that will come to something like 13,750. Listen, then that becomes the opening balance by the beginning of year 2, 2019. 13,750, you pay installment at the beginning, blah, 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 blah. That's one table. Look at the next table. Suppose the question told you it is one where you are paying your installments in arrears. So again, you will have a column for the year, a column for the balance brought down. First year 2018, tumepata liability ya 15,360. Are you paying any installment now? No. You are paying your installment at the end of the year. At the end of the year. Meaning, you have a liability of 15 by the beginning, which will accrue as a liability for the whole year. So it is on this 15 that you as a lessee, you will be charged interest on. You come and charge interest. 10%, that will be 15 is 36. Then you get the subtotal. Again, which I add the 2. I add the 2, which will come to lump something like 16,896. Let me assume so. Listen, then come the end of the year, you pay the installments of how much? 2.5. Then you carry down the balance. How much? 16 minus 2.5, that leaves you with 14, something like 396. So already you can see the two tables are different. But I started with the same liability of 15,360. But the interest charge is different, and the liability by the end of the year is different also. So what I'm trying to say is this. Whenever you have a question for lease, first ask yourself, are we paying our installments in advance, or are we paying our installments in arrears? It depends with the question. I have told you, if you are paying your installments in advance, that should be the first thing to be paid. Then, once you pay the balance of what is remaining as a liability, lease liability, that is the one that will accrue as a liability for the whole year. So you charge interest on that one. So if you are paying your installments in advance, you go by table number 1. If the question is one where you are paying your installments in arrears, then you are paying your installment at the end of the year. So your lease liability by the beginning will be again the one to accrue interest for the whole year before we come to pay the liability, the installment, sorry. Before we come to pay the installment, our liability would have already been earning interest, or we being charged interest. Okay? So if we are paying our installments in arrears, the next column after brought down should be the column of interest. You charge interest for the whole year. Then you get the total liability that is there at the end of the year. Then you pay at the end of the year, you pay your installments. Then you get the balance of the liability remaining. Then you come down to 2019 and so on. Now listen to another point. Listen to another point. Whichever of the table you are doing, whether in advanced table or in a layers table, listen. This question tells me to prepare financial statements for 2018 and 2019. 2018 and 2019. The lease period, I want you to listen carefully, the lease period was for 10 years. So the question is, will I prepare the amortization for 10 years? The answer is no. Question 2, will I prepare the table for 2 years? The answer is no. You will not prepare the table for 2 years. You will prepare the table for 3 years. Though the question is asking you to prepare the financial statements for 2018 and 2019, you will need the data for the 3rd year's data. And especially so, listen, especially so where the question is one where you are paying your installments in arrears. The reason, we shall discuss it when we are doing the balance sheet. But for now, just remember that when you are paying your installments in arrears and the examiner tells you to prepare extract for 5 years, then you need data for 6 years. If you are told to prepare extracts for 3 years, then you need data for 4 years. You need the next year's data. Good. So with that idea now, our question is one where we are required to prepare or to pay our installments in arrears. Let's now do the table properly now. Now that I've talked about it, very important to know that there are times when you are paying your installments in advance and there are times when you are paying your installments in arrears. Our question is one where we are paying our installments in arrears. Okay, so let's do our table. So have a column for the year, have a column for the balance brought down, have a column for interest, have a column for the subtotal, have a column of the installment, then you have a column for the balance carried down. The question says we do balance sheet for 2 years. That is 2018, 2019. But I'll need data for 3 years. I'll explain it. We start by bringing down the balance. By the beginning of the year, our liability was how much? It was 15,360. 15,360. I said I'm putting my figures in thousands so that I don't make my table too long. Then we compute the interest, and I think the charge for the year, the interest was, if I remember from the question, the interest was 10%. Yes, the interest was 10%. So we come and charge 10% interest, which will come to 1536. So with that, I add those two. I take that 15,360 plus 1536. That gives me 16,896. 896. Then we pay our installments in arrears 2.5. That's something we are paying. So all these figures are in thousands, mark you. Good. So what becomes my carry down? This is 2.5, sorry. So what are we carrying down as our liability by end of year 1? So I take that 16,896, I minus 2,500. That leaves me with a balance carried down of 14,396. 14,396. That becomes the opening balance of year 2, 2019. That is 14,396. 14,396. Again, I charge 10%. That will be 1439.6. Let me add those two. 14,396 plus 1439.6. I am getting an amount of 835.6. Then we pay 2,500. We pay 2,500 as the installment at the end of the year. So we are carrying down a liability of how much? I'm carrying down a liability of 13,335.6. 13,335.6. Then I bring down the balance by the beginning of year 3, 2020. 13,335.6. 13,335.6. Okay, 0.6. 10% of that looks like 1,333.56. Let me make it 1 decimal point, 0.6 to 1 decimal point, 0.6. I've taken 10% of that amount and I'm placing it to 1 decimal point. So what therefore becomes the liability before we pay our installment? That is how much? 13,335.6 plus 1333.6. That looks like 14,669.2. Again, I paid 2,500. Now I'm remaining with how much? I'm remaining with a balance of 12,169.2. 12,169.2. That is all I need for the table. I told you we don't need to do for 10 years. The examiner wants you only to do for 2 years. So let's continue now. Let me continue now. We want to do P&L extracts. Wamesema we prepare statements of financial statements for 2018 and 2019. Listen, for P&L, there is no big deal. Let us just do it direct. So come and see your profit and loss extracts. Put in bracket, lessee. We are showing in the books of the lessee. Listen carefully. In the P&L account of the lessee, what are the things that will appear there? 2 things. 1, the interest charge. 2, depreciation. Remember, the lessee is recognizing a right of use asset. So that right of use asset is being depreciated. He's also recognizing a liability, which is being charged interest. So 2 things will appear in the income statement of the lessee. So have a column for the year. Have a column for interest expense. And have a column for depreciation charge. 2018 and 2019. For the interest, I can pick it from the tables. I can see it up there. Interest for the first year was 15,36. Second year, I can see 14,39.6. So that is not a big deal. I pick the amount from the table. I pick the amount from the table. Good. Depreciation, we computed it and it was on a straight line basis. So I just go pick it. I can see it up here. The amount was 1,561,000 up there for depreciation. We took the right of use amount, we divided by the useful life of 10 years. Now we got that 1,561,000. We are putting our figures in thousands, so it will be 1561, 1561. Good. That's all for that. That's all for that. Let me go to the second part, that is balance sheet extracts. Let me go to the second part, balance sheet extracts. Again, in the books of the lessee. In the books of the lessee. I want to explain first. You will have a column for 2018 and 2019. The lesson, among the assets, non-current assets. Among the non-current assets. Remember, you have a right of use asset. So there, you will have here right of use asset. We saw the cost or the right of use value was how much? It was 15,610. Are you seeing it up there? 15,610. That was the value of the right of use asset. I want to explain first 15,610. Then you less accumulated depreciation. Every year 1561. So that first year you get a book value of how much? 15,610. I minus the depreciation of 1561. First year I'm remaining with a book value of 14,049. Second year I come and say again 15,610. Now I minus the accumulated by end of year 2. So 1561 times 2, what will be the accumulated? 3122. So I take 3122, I minus 15,610 minus 3122. I'm remaining with a book value of 12,488. So copy up to that first. Then I talk about the balance of the liabilities. So copy up to that balance sheet. Copy the asset section of the balance sheet. That is the right of use asset. The cost or the right of use value was 15,610. Our figures are in thousands. I minus the accumulated depreciation. First year is the same as the accumulated 1561. So you are remaining with a book value of 14,049. Second year, 15,610. I minus the accumulated by end of year 2, which is double of 1 year. So that is 3122. 3122. So you are remaining with a book value of 12,488. Then you finish. I want to talk about liability. That's the critical part of the balance sheet that I want to talk about. Finish, I talk about the liability. For the liability, we have to go back to the table. Finish. Okay. Now listen. For the liability, among your non-current, listen first. Among your non-current liabilities, there you will have what we call lease liability. Lease liability. Then, listen, among your current liabilities again somewhere, you will also have lease liability. So we want to ask ourselves, by end of year 1, how much was my liability? Listen, by end of year 1, how much was my liability? Once I know my liability by end of year 1, I ask myself again, out of that liability of year 1, how much of it is long-term and how much of it is current? The current liability amount out of the balance is how much out of that amount will take you less than a year to pay. Whatever will take you less than a year to pay, that becomes the current liability component. Whatever will take you more than a year to pay out of that liability, that is what you consider as a long-term liability. So let me take you to the table. And you follow carefully now. Follow carefully now. I can see by end of year 1, we are carrying down a liability of 14,396. That 14,396 will reduce to 13,335 by end of year 2. That 14 or that 13 will reduce to 12,161 by end of year 3. So the liability will keep reducing, and at the end of the 10th year, which is the lease period, the liability will be 0. So our liability will keep reducing, keep reducing. Now listen carefully. This 14 that I'm carrying down by end of year 1, part of that will take me more than a year to pay, and part of it will take me less than a year to pay. The point is, if I have a liability of 14, and in the next 1 year, that liability must come down to how much? To 13. The 14 by end of year 1, in the next 1 year, it must come down to how much? 13. So it tells me that in the next 1 year, I must pay part of 14. For it to come down to 13, I must pay how much in the next 1 year? It leaves me with the difference between the 14 and the 13. That difference is the part of the 14 that I must pay within the next 1 year. That is what you consider as a current liability. Then, out of 14, how much will take me more than a year to pay? Listen, if by end of year 1 I'm carrying down a liability of 14, which must come down to 13 in the next 1 year, it means that the 13,335, which is already part of 14, that 13 is what I cannot pay within the next 1 year. It is part of the 14. But in the next 1 year, I must pay a difference of 1,000 and something. It means out of 14, there is this 13 I cannot pay within the next 1 year. So out of 14, 13,335 will take me more than a year to pay. So that 13, listen, will go to the balance sheet of year 1 as a long-term liability. As a long-term liability. The difference, which was a 1,000 and something, will go to the balance sheet of year 1 as a current liability. Let me show here in the balance sheet. Don't copy fast. So by end of year 1, what is the lease liability that is considered as an uncurrent liability? It is my liability by end of year 2. Whatever is my liability by end of year 2, which is part of year 1 balance, that balance of year 2 is what I can't pay within the next 1 year. So that 13,335, that 13,335.6 is what will take me more than a year to pay. That is what I take to the balance sheet as a long term. 13,335.6. Good. Then for the current, listen, for the current, I'm getting it by subtracting how much was my liability by end of year 1. It was 14,396. It was 14, listen, 14,396. I minus that 13,335, 13,335.6. So how much out of 14 must I pay within the next 1 year? Let me do that calculation first. It will be 14,335 396I minus 13,335.6. So in the next 1 year, I must pay 1060.4. Okay, let me do the 2 years first. Now I go to the table for year 2. Listen, let me do the 2 years first. I go to the table for year 2 and I can see, listen now, we are carrying down a liability of 13 by end of year 2, 13,335.6. Then I ask myself again, how much of that 13,335.6 will take me more than a year to pay? How much of that 13,336 will take me less than a year to pay? Listen, if this 13 by end of year 2 must come down to 12,169 in the next 1 year, the 13 must reduce to 12 in the next 1 year. So it means the difference is what I must pay within the next 1 year. So it means therefore again, out of 13, there is this 12,169. Out of 13, there is this 12,169.2, which is an amount I can't pay within the next 1 year. So by end of year 2, this 12,169 will be the liability that I'm going to consider as long term. So are you seeing why? Listen, are you seeing why therefore I needed data for 3 years? For the purpose of the balance sheet, especially for balance sheet of year 2. Because I need to know how much of the 13,335 is long term. And to know how much of that is long term, I needed to know what's the liability by end of the following year. Whatever is the liability by end of year 3 automatically becomes your long-term liability by end of year 2. So that 12,169.2, that 12,169.2, we consider it as a long-term liability. That is what I'll put here. 12,169.2, that's what you consider as long-term. The current, I said I minus. What was the current, the liability by end of year 3? 2, sorry, it was 13,335. Good. So to get the current, I take that 13,335, I take that 13,335.6, I minus that 12,169.2. What do I get? I'm taking to get the current, I'm taking 13,335.6, I minus the 12,169.2. So whatever difference must be paid within the next 1 year, that's what I take to be the current. Let me take 13,335.6, I minus 12,169.2. Looks like a difference of 1166.4. 11, so that's how we are getting these figures. Good. So now you can copy those figures now. Now you can copy those figures. But maybe before we copy them, let me just explain. Before you copy them, let me just explain. I've said this. When you are preparing the balance sheet, listen. If you are to do balance sheet of year 5, the lease is for 10 years. If you are to do balance sheet of year 5, then long term of year 5 will be the liability by end of year 6. Then the difference between year 6 and year 5 becomes current. If you are doing balance sheet of year 7, what is long term of year 7? It is the carry down by end of year 8. I hope you are following. Good. That's what I'm trying to say. Then the difference becomes current. So you can copy this section now. We had copied the asset section. Now you can copy the liability section. So we are saying among the non-current liabilities, you will have what we are calling lease liability. Long term is what is the liability in the following year. Like in the first year, we had a total of 14. That 14 was to come down to 13. So 13 becomes long-term by end of year 1. So put that 13, 335.6. Then current, I got the difference between liability of year 1 and year 2. That became current. Because if I must reduce my liability from 14 to 13, it means the difference must be paid within 1 year. That is what came to 1060.4. Okay? Copy that. Then we go to year 2. Year 2, I had to ask myself, what are we carrying down by end of year 3? That became long term. And that was 12,169. Then to get the current of year 2, I took the liability by end of year 2, which was 13,335. I asked myself, what's the liability by end of year 3? 12,169. So if the 13 must come down to 12, what must I pay within the next 1 year? It's what we have got as 1166.4. Good. Put down that. So I hope you have understood the concept now. Put down that. Okay. Okay. So maybe for today we can stop there. Listen, next time we shall do an example 2 where we are paying our installments in advance. You remember our second example down here, if you look at it, we are paying our installments in advance. If you look at that example 2, we are told it is where you are paying your installments in advance. So once I look at those two, once I finish the example 2, where we are paying our installments in advance, we shall now do a past paper question. Okay? Then from there we shall develop the topic. So let's do next time the second example where we are paying our installments in advance. Okay? Don't forget the computation of the liability will change. Okay? Because this time you are paying in advance. There is a first installment you are paying day 1. Okay? Good. Fine. Let's stop there for today. We pick it up from there. But for the new students, I've told you, listen, you can continue with us and join the AFR class. We said for AFR, normally we have either early morning or evening. I'm talking to the new students who have joined us for class for free today. So you have advanced financial reporting, it's either early morning or evening. Listen, I have told you for your friends who are doing financial reporting, you can tell them that we also have online classes for financial reporting intermediate or for financial accounting of the foundation level, or what is for ATD. That is also what we are offering. I said, if you can't join a live class, you can buy what we call pre-recorded videos, where you get the videos for the whole syllabus. You listen to them. This is pre-recorded videos where you listen to them at your own free time. Okay? At your own pace. Now listen again. For those who are listen, I forgot to mention this. For those who are repeating or receipting, for those receipting, you may not want to, for those who are receipting, you may want to revise. So we also have what we call special revision videos. Special revision videos. These are purely for revision, not for teaching. So if you are receipting and you feel you need revision, we have what we call special revision videos for the advanced financial reporting and for financial reporting. So for those who feel they don't want to be taught again, they are okay with the content of the subject, what they just need is revision. That is, we have special revision videos for the subjects. Again, those who are interested, let them call me on 022 0722 6588 0722 658875. That's my number. You can call me on that number. So for those who are interested, some of you may be here. I also told you, please subscribe to my YouTube channel. If you have not subscribed, click that subscription button. As you are watching this video, if you have not subscribed, whether you are my normal student or you are a visitor today, just click that subscription button and subscribe to my YouTube channel. Also, by the way, if you like the video, you can click the like button. If you like the class for today, you can click the like button. No problem. You can also click that button for the like. You like the video if you like the class for today. Otherwise, see you next time. See you next time. Bye for now. Bye for now. See you next time. Bye for now. Okay. See you next time. Bye. Okay.